going on, people? It's your boy Kalechi back with another video. If this is your first time around these parts, hit that subscribe button. If you enjoy anything that we talk about on this video, hit that like button. Turn that thing, say it with me now, blue. But anyway, welcome back to another video. And this time around in this video, we're going to be talking about Lemonade, which, as you guys know, is one of the companies that I'm really excited to learn more about and to be invested in and to actually grow with this company. I was going to say that this is one of those smaller companies that I'm excited to learn and grow into. However, the company is worth about $5 billion right now, so it's not really a small company anymore. It's a rather big company. However, I've been learning more about the company and I really like the company. I've been talking about them for like over a year now. You can see all the other videos in the playlist that I have linked up here. But anyway, they came out with earnings recently, and well, right after they dropped earnings, the stock dropped about 15%. Like, it was like, I keep on saying that every single time I see earnings right now, I just expect the stock to drop. Now, not to drop to the level that Lemonade dropped, but still, it dropped 15%. I think part of the reason why we saw such a massive drop is because Lemonade got overhyped. Like, it got so much expectation booked into it. So many people bought it, like, at the end of last year for, like, I think Motley Fool like did a expose on Lemonade, and then, you know, Motley Fool has a bunch of people that follow them. So once they say buy this stock, a bunch of people go ahead and buy the stock, and that just caused Lemonade price to just skyrocket, which pissed me off because I was over here like just nibble and diving because I ain't got that much money anyway. But I was just slowly getting into Lemonade and building my position in Lemonade, and then thing just exploded on me, and I was just like, come on, God, like, why y'all doing this to me? But anyway, the stock, and because of that, there's been a lot of expectation built into it, a lot of overhypeness built into the stock, and that caused it to run way too much. As a matter of fact, if we do year to date, it's actually down 32%. At one point, it was $183 and it's down over 50% on the position. If you bought Lemonade when it was trading at $183, you're down 50%. That's what happened with Lemonade, because there was so much expectations being built into this stock that there's only one way that it can possibly go. It can't keep going all the way up to the cloud. Like Howard Marks likes to say, trees don't grow to the sky. It's just not possible. And that was one of the things. It was like, what's going on? Like, Lemonade is not a profitable company here. How can it be worth $20 billion? It cannot be worth that. And that's somebody who's bullish on the company. It just had way too much hype built into it. But now that it's coming back to earth, I am excited. Even though some people will be like, oh my God, the stock is losing. I don't care about that. I care about the business of the stock. And like I said, this is one of those companies that I want to keep learning about and continue investing in over the long run. I think this is one of those companies that in 30 years, hopefully, I hope it doesn't go bankrupt. In 30 years, I see it as one of those wonderful businesses that I will own for the long term. But anyway, let's get into this earnings result. So the first thing that I want to do is I want to compare Lemonade's earnings guidance from the first quarter of this year to what they actually did in the second quarter of this year. One of the things we have to be careful about, though, is companies tend to lowball their guidance sometimes. But even if you're lowballing it, you're setting the expectation. So if you set the expectation and you still can't meet those expectations, that is a problem. So let's see how Lemonade performed when we compare their guidance for Q2 when they announced it in Q1. So they said that in-force premium would be about $283 million to $288 million. As you can see, in-force premium increased by 91% to $296.8 million as compared to the second quarter of 2020, primarily due to 48% increase in the number of customers, as well as a 29% increase in premium per customer. That is good to see that they actually beat their expectations. It's good. I want to keep seeing that. I want to see them continue to do and go in the right direction. The next one, gross earned premium. How did they do? They said that they expect to get $63.5 to $65 million for gross earned premium. If you look at it, second quarter gross earned premium of $66.9 million increased by $31.6 million or 90% as compared to the second quarter of 2020. That is good to see. They brought in 66, which is a little bit over the expectation. They didn't crush it as much as they crushed in-force premium, but it's still a beat. They still beat it, which is good. Now, revenue, they expected $26 to $27 million in revenue. And revenue, they said second quarter total revenue was $28.8 million. That is good to see. They expected only 26 to 27, and they brought in 28. That is good to see them actually do that. Now, the next one is, it says Adjusted EBITDA loss, they're not making money right now. They're still building out the business. They're not making any money. They're losing money, and they expect losses to be about $40 to $43 million. They actually increased the amounts that they're spending, which is good. It's good to see them increasing the amount that they're spending on the business. Q2 increased by 126% to 68.1 million as compared to 30.1 million from the second quarter of 2020. And adjusted losses was in the range that they expected it to be and was about $40.4 million, which was increased by $22 million. So Overall, just looking from what they gave us as the guidance of where the company should be headed, they are hitting the targets that we expect for them, which is good. But even better than that is they are still growing. They are still growing rapidly. So let's just go through a few things that I wanted to highlight from the earnings call. The first thing that you always notice if you ever open an earnings call or ever open any earnings result is the thing that the company wants to highlight the most. That's the thing that you see on the first page. These are the numbers that they're like, yo, look at these numbers. We promise we're doing well. Like, just check these numbers out. And that's exactly what they did. In-force premium, by the way, if you don't know what in-force premium are, in-force premium is the total amount that is paid, that customers pay to Lemonade for coverage. So let's say me and my sister and my brother pay like $20 a month to Lemonade. That's the amount that in-force premium is. That's the amount that they take in. So they brought in $297 million in in-force premium, which is a 91% increase from the previous year. As far as customers, they increased customers to 1.2 million customers, which is an increase of 48% from last year. But the thing that I even want to take notice of more than that is the number of customers from quarter to quarter. For a business that is still growing like Lemonade, you have to pay attention to the customers from quarter to quarter. And they actually went up by almost 200,000 new customers. With insurance, this is extremely difficult to do. Insurance is not an easy business to get into. It costs a lot of capital, all that good stuff. So this is good. This is good to see. Also, not just that they're getting more customers, but they're also getting more premium per customer. In other words, people love the service so much that they're deciding that, you know what, I'm not just going to get my renter's insurance with them. I'm also going to get my pet insurance with them. I'm also going to get my life insurance with them. People are deciding to get more insurance with Lemonade. This is good to see. As you can see, the gross loss ratio, by the way, gross loss ratio is the amount that the company is having to pay out in order to cover damages and those kind of things, in order to actually cover people's insurance claims. That's the amount, and gross loss ratio is telling you how much of the money in in-force premium they're having to pay out. So we saw this uptick in the last quarterly report. That was due to the Texas freeze that we had, and that actually was all the way up to 121%. So it's good to see that is coming back to earth. That is coming back to being more in the normal range of about 67%. I'm hoping that this continues to decline. I want this to be closer, and I think this industry standard is about 60% ish. So we want to keep seeing this continue to go further and further down. But we can see because of the Texas freeze, we saw that spike happen at the beginning of this year. As we talked about earlier, gross earned premium, 67 million. That is good. That's the amount of money that they keep on their books. That's the amount of money that they actually get to keep to run operations and all those kind of things. So those are some numbers to just look at real quick. The other thing that I wanted to talk about is, like I said earlier, I don't know everything that has to do with Lemonade, but one of the things that I want to focus on is in this in-force premium. So Lemonade is something called a reinsurer. In other words, they sell some of their insurance coverage to another company. For example, they may sell it to a company like Berkshire Hathaway, which I believe is one of the largest insurers in the country. Like, they do a lot of insurances. So they sell that to like Berkshire Hathaway to get more additional coverage, because Lemonade cannot cover all of the costs that it has to pay out from time to time. So because of that, Lemonade has to pay some of this in-force premium all the way to the company. And for Lemonade's case, they pay about 75% of that in-force premium to like the reinsurers that they sell to. So they said in their earnings report, we agreed to cede 75% of our premium to a panel of partners, thus retaining 25% of the risk on our balance sheet. This strategy limited our volatility exposure and enabled our financial model to be capital light. In Q1 21, when the Texas freeze had a major impact on our gross loss ratio, this reinsurance program worked exactly as designed, shielding our bottom line from 75% of this impact. Our reinsurance partners, of course, are for-profit institutions, and more reinsure ultimately means more cost. Therefore, as our business grows and diversifies, lowering our book value, we plan to gradually reduce the portion of premium that we cede over time. In other words, as Lemonade grows bigger, as it gets more customers, as it's able to get more numbers in premiums, it will be able to cover more of those risks on its own, and it won't have to give out so much of its profits to all the reinsurance. It won't have to give out so much. It won't have to pay so much to get coverage. It will actually be able to cover some of these costs on their own, which means profit margin will start going up and they'll actually be making a lot more money. So that's something that I'm still learning a lot more about this whole system. There's a lot more words that they said about the contract, how it plays out. To be honest, I still don't fully understand it. It's one of those things, like somebody was telling me, like sometimes you don't understand a business until you start investing in it and you're forced to learn more about it. And it's just like that for me. Like I never even knew what 90% of the words that was on this was until I decided I'm investing in Lemonade, and then I decided I was going to start learning about it. So I started learning about it. I still have a lot that I need to learn, but as I'm learning slowly but surely, I'll share that information with everybody, and you guys can come along with me on that journey. And hopefully Lemonade will be a good investment on my part. The other thing that I want to jump into is to focus on the fact that Lemonade is no longer super reliant on their renters business. Is no longer just reliant on their renters business. The thing to remember is renters insurance margin is not that high. Like renters insurance margin is not that high, which gave Lemonade the opportunity to actually infiltrate the insurance space. It was one of the things that Lemonade used to their advantage to start stealing customers away from the bigger players. But because renters insurance is not that high, it is key and it's paramount that Lemonade has to diversify its insurance offering. It's very important that Lemonade continues to find new insurance things to sell to individuals to make sure that they can buy it. I mentioned it earlier that Lemonade showed a good mix, or I mentioned it earlier that the in-force premium is going up because people are liking Lemonade so much that they're choosing to get more insurance products from Lemonade. So they said this: for the second consecutive quarter, renters represented a healthy 50% of our new business in Q2 21, down from 75% in Q2 2020. This is primarily enabled by shifting mix of first-time Lemonade customers to higher premium products, pet, home, life, but further amplified by Lemonade renters graduating to become homeowners and buying life and or pet policies. The other thing is, one thing Lemonade talks about is lifetime value. In other words, as people get older, people are going to basically just keep using the same type of insurance with them. And as they can provide value to those customers, they're going to grow old with them as they get more things, as they need life insurance, as they need house insurance, car insurance, which we'll talk about that in a little bit. But as they get older, they're just going to say, oh, you know what? I love Lemonade. I love the service they provide. I'm just going to buy it with Lemonade. So that's what Lemonade's aim was. That's what also why Lemonade started with insurance costs, because when we start off with our career, we ain't making that much money. But as we get older, we make more money. And if Lemonade can latch on to us, or if we can latch on to Lemonade and say, you know what? I love their service so much, I don't want to leave Lemonade, then we grow with Lemonade. And that's what Lemonade is playing into. But at the same time, Lemonade is also trying to acquire other customers in other divisions. So if we look at the breakdown, we can see renters insurance is now 56% of the business, and 30% is homeowners insurance, pet insurance is 13%, and life insurance is 1%. So the key thing to know about this is renters insurance, the margin on renters insurance, like I said earlier, is very low. Homeowners insurance is higher, pet insurance is even more higher, and life insurance is like that much higher. So as they grow, it's very key that Lemonade starts finding ways to grow and diversify away from renters as much as it can diversify into homeowners, pet, life insurance. I'm pretty sure that they've seen a major boom because of everybody buying real estate last year, and that has helped out a lot with homeowners insurance. I want to see life insurance continue to grow out. I want to see them do well in life insurance and also pet insurance as well. A lot of people got pets last year. A lot of people are going to need to get insurance for those pets. So this is good news to see as far as Lemonade is concerned. And Lemonade just continues to be one of those companies that people just love. People just love Lemonade. I mean, as a matter of fact, it keeps on winning more and more awards. It won some awards in Netherlands, In Netherlands, it just keeps on being rated one of the best companies around. I mean, we talked about it in the last earnings report, how they were rated alongside companies like Apple and Nike. So it's good. Usually you don't see those kind of ratings for insurance companies. So this is good. It's very good to be seeing Lemonade report some of these things and see them actually continue to grow and continue to move in the right direction. The final thing that I want to talk about is the one reason that actually attracted me to the investment in the first place, and that is Lemonade's Giveback program. Like I say on this show all the time, generosity is always greater than greed. So when I learned about this company, I was like, whoa, what? They're giving back money? Like, hold up. And Lemonade, they announced that our donation of $2,303,381 to 65 nonprofits chosen by our customers in this year's annual Lemonade Big Give Back more than double the prior year amount, more than 4,000% up since the program's inception in 2017, which is literally the main reason that I invested in Lemonade in the first place, is because I was like, yo, I love the direction that they're going. I love that they're a B Corp. I love the fact that they have this ingrained into the nature of the business. So that was what attracted me to Lemonade. And it's good to see that they are still doing this. I hope that they don't give this up, because the moment that they give this up, I'm going to be like, because this is like literally one of the main reasons that I invested in Lemonade. But anyway, that's all I got for y'all. Y'all let me know. What do you think about Lemonade? Is it a good business? Is it a bad business? Is it overrated? Or is it something that we can invest in and grow into over time? A lot of people are going to look at this business. I'm not going to lie. Like, is it overvalued? Probably. It's probably overvalued. But at the same time, for me, it's something that I'm growing into over time. It's something that I'll invest into as life goes on. It's not going to make like the biggest part of my portfolio, but it's one of those businesses that I see can be good as we keep going on over time. Oh, the last thing, I forgot to mention this. Lemonade Car Insurance. Of course, it's not been released yet. We don't still have a date on it. They said that notwithstanding our good progress on the development of Lemonade Car, given our dependence on regulatory approvals, the timing of which is hard to tie down, we are not at this stage announcing a concrete launch date, nor are we including anticipated in-force premium associated with Lemonade Car in our guidance for the full year 2021. So we'll look forward to when they actually release this car insurance to us, and then that'll add on. And car insurance is one of the most profitable part of insurance companies. But anyway, that's all I got for y'all. I hope y'all learned one, maybe two things out of this entire thing. And if you did, hit that like button. If you loved it, hit that subscribe button. But I'm gonna catch y'all up on the next one. Remember, generosity is always greater than greed. God bless each and every single one of y'all. And y'all boy is out of here. Peace.